Hi, so eBay feels a little bit like the dinosaur of the internet world. They were a big deal 20 years ago before the rise of Amazon for online shopping, but I think a lot of people forget that eBay has more websites than just ebay.com. Today I plan to take a look at the entire company, explain what is inside, and then see whether there is an interesting opportunity here in a company that has been a little forgotten. Please hit that like button for me so at least I know that this video is interesting. Now, if you are new to my channel, well, welcome. My videos are about investments that anyone in the world can make, and I'm trying to help as many people as possible understand what it is they're actually investing in. See, most people spend far more time researching their next phone than they do their next investment. And I have built a reasonable sized investment portfolio myself, and I'm aiming to grow it at 20% per year. So that's what we're looking for. Now, I base a lot of my knowledge on the great investors of the world, the Peter Lynch's, Warren Buffett's, Charlie Munger, Mohnish Pabrai, and a handful of others. Now, obviously, I'm not perfect at this. Some of my investments that I'm going to make aren't going to work out, but we're definitely going to find some great investments and push for that 20% goal. Now, eBay isn't just ebay.com, like most of us know. They also own these classified style websites. Now, you might not be familiar with these websites, but I did a little hunting around and found that these are extremely popular websites. You've got mobile.de, which is the German car sales website. It's the 26th biggest website in Germany. You've got Kijiji, which is a Canadian classifieds website, 16th biggest in Canada. Gumtree, which is in the UK and Australia. It's a big website in Australia, 22nd. And Marketplaats.nl, which is the Netherlands classified website, being 10th in the country. Now, eBay.com in the US is second behind Amazon at about 20% market share. Look, Amazon is obviously the top dog here by a lot, but eBay still has a big piece of the pie. As an alternative to Amazon, I am assuming it has benefited greatly from the lockdowns. We'll check that in the growth section of the financials. Now, the growth of this sector called the refurbished merchandise market appears to have a lot of untapped potential. The CEO, Jamie Lenoni, not sure how to pronounce that, in a recent conference call pointed this out. We see tens of billions of dollars in untapped potential in the global refurbished market. Through our new certified refurbished program, buyers can save up to 50%, unlike new branded inventory, with all of the assurances of buying new, including a 2-year warranty, eBay money-back guarantee, and hassle-free 30-day returns. Now, I think this is an interesting play, and the market that they're going to be playing in is gigantic and still obviously has a lot of growth to come. So if eBay can pull off this strategy, well, for their business, they're going to make a lot more money than they're currently making. So I think there is significant potential here. It is starting to look like a reasonable, large, long-term upside bet. Of course, Amazon is some serious competition, so that is the reason for the lack of love for eBay. Okay, in the latest Q3 results that came out from eBay, their earnings per share came in at 85 cents, which is 64% up from last year. Revenue at 2.61 billion, which is 25% up on last year. Now, this is an interesting point. The promoted listings revenue is 186 million, and that's 79% up from last year. And their active user base is up 5% year on year. So a lot of growth here from this time last year, similar to what we saw from Amazon. So we can conclude that it is pandemic-related tailwinds. I like that promoted listings revenue grew so much. See, promoted listings are what sellers decide to spend to advertise their products on eBay. This means that sellers are getting good returns and finding eBay a good place to advertise. I think if sellers start making good money on eBay from a return on investment point of view, more and more sellers will list their products on the platform, which will increase the activity. Seth Klarman is a real true value investor and one of the most successful of all time. If you have been watching my channel for a while now, you'll know that I love a good margin of safety. Well, Seth Klarman, he wrote the book on margin of safety. He runs the Brokerage Group fund that sits at around $27 billion of assets. And guess what is his biggest holding? Well, that's right, it's eBay. So he has over 20% of this big portfolio in eBay at an average price of about $31 a share. Now, the current share price, depending on when you're watching this, is about $50 a share. It's December 2020 when I'm recording this. So that is a very good indicator of a good buy price. If one of the best value investors is buying at $31 and he wrote the book on margin of safety, well, I think that would be a good buy price. Okay, with any business, to check the financial health of the company, we want to look at these 3 areas. Can they handle their debt? Are they growing? And are they a well-managed company? Now, look, don't worry about the terminology here. Just sit back and relax and just try to follow along. It's part art and science anyway. Now, it is really important to look at the company's debt because businesses can't go bankrupt if they don't have debt. Debt is the number one reason companies get into trouble. So to see if the business can handle its debt, I go through the debt to equity ratio and the current ratio of the company. Okay, now eBay actually has a really high debt to equity ratio at 2.7, when I like it below a 0.7. Now, I dug a little deeper and it appears they have borrowed money at cheap rates, but I still don't like such a high debt to equity number. I actually think it is a sign of poor management when compared to all the other tech companies that have really low debt to equity ratios. If something bad was to happen, well, this would hurt the company even more with the extra debt they have. It's manageable if things are going well, but it is riskier. Now, the current ratio is totally fine above a 1.5, so short term, they will be fine. Now, in the finances, to check for growth, I look at the book value per share, the earnings per share, the operating cash, and their gross margins. Now, this is declining book value per share, and this isn't a good trend at all. Now, this is the earnings per share, and as you can see, it has been a bit up and down, but the overall trend is stable. We want to see this growing, especially with all that debt. Now, this is the cash from operating activities, and look, more bad signs here with inconsistent operating cash flow. Gross margins is something I have started focusing a lot more on lately. See, a company that can grow their gross margins is doing a lot of things right. Now, eBay has really high and solid gross margins at 77%. Look, this is going to be very beneficial for the company. I think I am going to have to give them a cross here for growth though. Although their Q3 numbers are really great and their finances this year do look great, I think it is covering up a fair few issues with the company. I'm just not happy enough with their history. Now, we can't just go and have meetings with the management team and sit in and hear what they're talking about, but there are some telltale signs in the financials that tell us if their management team are making some good decisions. So I check for the return on tangible equity, the free cash flow, and their cash on hand. Now, I want to see the return on tangible equity above a 15, as it shows management are improving the value for shareholders. eBay is all over the place and not reliable. This is eBay's cash in their bank, and it has been declining as well, and that's an issue considering the debt that they have. This is the free cash flow, and it's a bit better here, but I think it doesn't really matter anymore. There's just been too many issues here with eBay. All right, so overall, pretty ugly financials here from eBay. The debt is an issue for me, mostly because, well, they haven't shown good growth. And honestly, I don't see what Seth Klarman is seeing in eBay. Most likely he knows something that I don't, otherwise he surely would find better investments. Now, I still just want to take a quick look at the valuation, just in case it is an insane bargain. Maybe that's what Seth Klarman found as well. Okay, to get a copy of the calculator that will help you find intrinsic value, I have a link in the description and it's free if you want it. Now, when I say intrinsic value, what I'm talking about is based on the growth rate of the company and how much money the company makes. Intrinsic value is like the correct share price today. Look, it's not perfect because we're making a lot of assumptions about the future and their growth rates, but it helps us get a ballpark figure. Now, the stock market often overvalues or undervalues companies, so this is just one good approach to working out its value. Now, I use these metrics to find intrinsic value. The growth rate for the next 5 years is 14%. Now, it's surprising. The estimates across multiple sources are indicating pretty decent growth here. Now, we'll reduce that down to 10% for the next 5 years, as most companies do slow down a little bit from higher growth rates. Now, to find intrinsic value, we use a discount rate of 8.5. It's just rounded up to 9% here. The multiple we're going to use is quite standard for eBay at 15. Now, the operating cash minus maintenance capex number, I've just used the free cash flow number. It's easier to find, is 1950, and the shares outstanding is 747. Oh, and both those numbers are in millions, by the way. So the current intrinsic value is $75. Now, that's with absolutely no margin of safety. So let's put a 50% margin of safety on this because that's what Seth Klarman would do. And that's what we should do as well. So a solid buy price with a 50% margin of safety would be $32. Now, this is just my estimations. Look, play around with different growth rates. If you think things will be better than what I think and what the analysts think, then look, try higher growth rates. Just don't forget some margin of safety. No one is going to be able to predict this exactly, so you need some breathing room for errors. It's really important. Now, the current share price as of December is about $50 for eBay, so look, we're not even close. Now, I'm pretty happy here with my calculator. See, Seth Klarman bought into eBay at $31, and my calculator tells me $32 is a good buy price. So do I want to invest in eBay? Now, I know I said in the first half of this video that eBay looks like an interesting opportunity for high upside, but after going through the financials, I have little trust in the company and haven't seen any quality growth over recent times. Look, maybe this is a turnaround story. I don't know. but the current share price is just way too high for even thinking about it. Please let me know what you think of eBay as an investment. I'm really interested to hear different opinions. Now, also hit subscribe if you haven't done so yet so you don't miss any future videos of mine, and I will see you next time.